always look specifically in the suburb that you want to buy in and the surrounding areas.
What are some of the practical things that buyers can think about when interest rates are still moving?
What decision do you need to make when? Because you don't have to make them all from day one.
Today we're talking about something that can have a massive ripple effect on your buying journey, and it's interest rates. It can affect how much you can borrow to what you'll pay each month, and even the speed at which property prices then change. In partnership with Stockland, I'm here with Senior Economist for REA Group, Anne Flaherty, who's here to share the national picture, and Stephanie McKenzie, Stockland's Head of Sales, who'll give us that on-the-ground insights from the sales frontline. And let's start with the bare basics here. When the Reserve Bank shifts the cash rate, what are the main ways it flows through to buyers?
Well, the first thing we see is that when the cash rate moves lower, mortgage rates typically move lower.
Mm-hmm.
That means for someone who already has a mortgage, what they're paying per month might come down.
Mm-hmm.
What it means is that for someone who's looking to buy a property, the amount that they can borrow is normally increasing because, of course, that overall interest repayment is lower. Now, while in theory this sounds like a great thing for new buyers, in practice what it means is that because people can borrow more, they can typically spend more on a home and then home prices generally increase in response to that. So you might be able to borrow more, but you're most likely buying into a market where the prices are higher.
So is it right to say then that even a small move in the cash rate can actually change the equation pretty quickly?
Absolutely. And we really saw that earlier this year. So when we saw interest rate cuts for the first time in February, that really kick-started a massive recovery in consumer sentiment. We actually saw more people searching to buy homes on realestate.com.au in the week that followed that first rate cut than we'd seen in over 3 years.
Wow.
And if we look at what's happening in the market at the moment, auction clearance rates are performing really well. We've seen big upticks in demand, such as inquiries and searches. So even those expectations around future home prices are extremely strong at the moment.
And you've been tracking recent market data. What are the national trends now that interest rates have started dropping?
We've seen some very big shifts. And if we look at those forward indicators of demand, things like how many people are searching to buy homes, how many inquiries are being made, they're sitting at the highest rate in around 3 years. If we look at what happened post the August rate cut, home price growth accelerated. We've seen this year the pace at which home prices are rising has really picked up in response to those lower interest rates. So for buyers out there, they're buying in a market where home prices are rising and where they're likely facing more competition.
Steph, you are talking to buyers every single day. How are you seeing these interest rates play out in real time?
We're seeing some similar trends that REA is seeing. So there's definitely more confidence with buyers to move forward. There was a period of time where many consumers were feeling a little bit stifled in terms of should they act, and that was very much driven by the uncertainty in interest rates. Now that we're seeing those shifts come down, we're seeing those who are sitting on the fence now back in the market and looking to mobilise and move. So that confidence is real and it's there. From a new builds perspective, we see a lot of customers come into that market because it does provide certainty. So to provide certainty in the sense of what you pay and what you can lock in today whilst you are preparing for the next phase. Because you, in a new build scenario, what's different to the established market is you will commit to a property that is off the plan. So you've got some time to start continuing to save and work out what you need to do around it. But you get the certainty of today's interest rate with today's price, which is a huge benefit to a lot of buyers who are looking for that certainty, particularly when they're still relatively operating with a little bit of cautious optimism.
All right. So it sounds like nationally demand is picking up, but how would you say it compares to pre-pandemic?
So there's a few differences that we're seeing between now and the pre-pandemic, and a couple of those, well, actually the primary change is actually what they're looking to buy and secure and what's driving that motivation. So pre-pandemic, a lot of lifestyle-driven choices that people were making around securing a dream lot to get a dream home, and those things are still really important. What we're seeing now is more price-conscious buyers of making sure that they are still securing a property, but more conscious around what they're paying. and making sure that they're thinking about two things. One is securing a loan with an interest rate that they're feeling comfortable with. The second part that they're thinking about is serviceability of that loan. So what they can afford today is really important in how they're thinking about the choices that they're making. What does that mean in terms of the properties that they're looking at? We're seeing shifts from looking for larger lots, for larger homes, to looking for more smaller compact decisions. So whether that's a smaller lot that gets you on the property ladder, and for many they're looking at townhomes as a solution, a much easier new build process to go through, whereby they're getting a brand new home, beautifully designed and carefully located around amenity, which many people like, where they can lock and leave and they get the benefits of enjoying the community that's around them.
Okay, so this shift to townhomes and this lock up and leave lifestyle, is it, do you think, solely driven by affordability, or what else is at play here?
I think it's two. I think it's definitely affordability for many customers, and we are seeing a shift in the type of buyers, the demand profile we're seeing. So we are seeing a mobilisation of more investors across the country, first home buyers, downsizers. So the mix of customers is changing and how they want to live. So that is one, and affordability plays out for all of those customers. The second is how people want to live and what they want to do with their time. So we are all time poor. We're seeing more customers looking for getting a brand new home that they've got the benefits of everything that they want, but they can, as I said, lock and leave. They can walk to the shops, they can walk to the park, they can meet friends and neighbours, and they can enjoy life as opposed to it's all centred around what happens in the home. So they get the best of both.
All right, so let's move on here to really big picture, because when borrowing power goes up, so too often does competition. And what does that look like on the ground for people who are shopping for a home today?
Well, the first thing that buyers might see is signs that there's more people visiting those open homes, those open for inspections. Another thing, of course, is that you're buying into a market in which home prices are rising. I think a very critical thing to emphasise, though, is that just because we see a certain trend nationally doesn't mean that we see very different trends in different suburbs. So don't be put off if you read articles about home prices rising very dramatically. Always look specifically in the suburb that you want to buy in and the surrounding areas, and look at what those local trends are doing. Because while we might see prices rise more generally, there are some areas where price growth might be slower, or in some cases, price growth in certain suburbs might actually be faster. So if you are set on buying in those suburbs, you might need to be a bit more competitive with the bid that you put in.
I do have another question for you, Steph, because one of the interesting things about new builds is that the buying process can actually stretch, could be months, but actually could be years, which means that then interest rates naturally are probably going to fluctuate along the way of somebody's buying journey. How does this impact their price, their build? Like, how does this timing piece factor in to their buying journey as a whole?
Timing is definitely a key factor for buyers looking in the new build space, and it is a great attractor for many customers who are looking for that time. What that does is it gives you the benefit of locking in today's price. It gets the benefit of any incentives that comes with the new build market, which across the country there are many, particularly for first home buyers, and you lock in certainty around today's interest rate. Buyers are smart. They know that those things will change over time, and generally they're in favour. They're more favourable in terms of what tends to change, particularly if prices are going up. Customers, see that that's early equity in the purchase that they've made. So they are looking to get certainty right up front, but they get the benefit of being able to have flexibility and a level of confidence that as they're going through that new build process, they've got some financial flexibility if they need to pay rent or if they need to sell their home. They're not locking up all of their funds straight away. And then they also can make different choices as they go, particularly as it relates to the decisions that you make in a new build. You don't have to make them all straight up. You might choose the land and then you might start thinking about the design of your new home. You can start thinking about what you want to do and what you can afford. It's a big part of the purchasing decision around the home and building a great quality home with all the things that you want. So customers are looking for confidence that they don't have to compromise on that new home, which is why people do decide to go with a new home over an established in many instances.
Are you seeing buyers today using this logic?
Yes, we do. And we see that a lot, particularly with first home buyers who are looking to get into the market. The new build is a good option actually for first home buyers. It gives them certainty in terms of price. It gives them certainty in terms of cost outlay and time. And it gives them that time to also start saving if they need to, whether it's 3 months into a build or whether they're buying in one period and settling in another. That flexibility is a big advantage.
Okay, so Anne, if somebody is buying a home today, what are some of the practical things that buyers can think about when interest rates are still moving?
I think, first of all, which direction are interest rates moving? If interest rates are rising, then there's a good possibility that home price growth will be pretty stagnant. You might have a bit more breathing room as a buyer. Mm-hmm. If, like what we're seeing at the moment, interest rates are coming down, there's a very strong possibility that in a year's time, prices are going to be higher than they are today. Mm-hmm. Now, if you are in a situation where you can start that buying journey, it might be better to lock in a price sooner than later before those prices rise. I think, though, it's very important for buyers not to lose hope if it does take time, and we know that the buyer journey has been increasing. We've seen that very clearly in our own research. So don't give up hope, keep looking, and always do your research. As you mentioned, markets within markets, look at where prices are sitting where you want to buy. Don't get too distracted by some of those broader trends.
And my last question is, Steph, if somebody is buying a home today, what is your one big tip for them?
Understand the options that are available to you. So when buying in an established market, it's pretty finite in terms of what the process is, how you need to secure your funding, and it's quite a simple process. Choosing to build new is quite a complex process and has lots of advantages that comes along with it. One of the biggest advantages is you don't have to pay the full upfront cost of the home from day one, which you do in a general real estate transaction. So that's a huge advantage. But it is a long process. So it's really important that you understand all the options available to you, what the contract terms are like, what the time frame looks like, what decision do you need to make when, because you don't have to make them all from day one, and making sure that you're using and leveraging the experienced people within the industry, whether it's land sales agents or new home builder reps. They've been through this before and they've helped many people before. And what we do see is for many people going through a new home build, it's the first time that they've done that. So, you're not expected to know everything, but you have many supporting people around you to support you through that process.
I think that's great advice. And I think that if there is one takeaway from today's episode, is that interest rates are very much more than just numbers on a graph. They really ripple through to borrowing power, property prices. And what I've learned today is that they can really have an impact on buyer behaviour and the decisions that they make. So thank you so much for your time today. It's been really informative.
Thanks,
Alice.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. The information discussed in this podcast is provided for general information purposes only and reflects opinions based on information available at the time of recording. It should not be relied upon as financial, legal or professional advice. You should make your own inquiries and seek independent advice tailored to your circumstances before making any decisions. Views expressed by third parties are their own and do not necessarily represent those of Stockland. To the maximum extent permitted by law, Stockland accepts no liability for any loss or damage arising from reliance on this content.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.